Let's shift gears to corporate tax reform, because we've been talking about individuals. The U.S., as is often pointed out these days, has the highest corporate tax rate in the world. Should we cut it?
The U.S. has the highest statutory corporate tax rate in the OECD. Japan has cut theirs, and so we're sort of left as an outlier. Most people say we should cut it. There's a broad consensus in Congress for a lower corporate tax rate. Actually, President Obama has proposed a lower corporate tax rate, and one of the key elements of Dave Camp's outline for tax reform is a cut to 25%. But should we cut it? I think that depends on what you're talking about as a cut in the rate, because the effective tax rate paid by companies is significantly lower than the statutory rate. Some people might say that the effective tax rates being paid by companies are actually too low, that we are not raising enough out of the corporate tax. And as a percentage of revenues, historically, the corporate tax is at an all-time low. The U.S. is raising less money from corporations than it used to. There are a variety of factors for that, but if this rate is so high, if it was so oppressive, you wouldn't expect the corporate tax to have withered to the extent that it has. So do I think we should cut the rate? I think that depends on what kind of a package you're talking about. Should U.S. multinationals be paying lower taxes? No, they're paying incredibly low taxes now. Should domestic firms be paying lower taxes? They're the few companies that are paying the high statutory rate? Yes, probably, because their tax rate is an outlier.
I think that most people would agree that reducing the corporate tax rate in the United States is a good idea, because it is the highest in the world, and that's not a distinction anybody wants. In addition to that, and a lot of liberals will immediately respond when they're confronted with that assertion that we have this highest rate. They'll say, yeah, but the effective rates actually paid by corporations, they're much lower. To which my response is, well, then we have the worst of all possible worlds, which is that we have this high sort of fictional rate, plus all sorts of loopholes and preferential treatments that reduce the way that those rates actually work, and that distorts the marketplace in all sorts of different ways. So we have a terrible system with high distorting rates and a Swiss cheese base that also distorts behavior. So the sum total of that is terrible. We should definitely want to reform that. But you have the same problem that you have with regular, individual tax reform, in that paying for rate reduction is going to be really hard. There are, some things that we can do, but that might allow us, might raise some money in relatively uncontroversial ways and allow some reduction in the rate. But the really big ticket items, things like the way we treat interest and borrowing for corporations under the tax system, those are going to be very hard to change. They would raise lots of money. They would let us lower the rates by quite a bit, but it's going to be very hard to actually make it happen. So on corporate reform, also like individual reform, I think it's possible you might see some very modest reduction in rates, and we might want to just call that a victory and walk away at that point. All right, well, so you've hinted this already, but it sounds to me like what you're saying, that there are some problems within the business community that might get in the way of tax reform. What are those?
Well, the problem is that there isn't one business community. In fact, within the business lobby itself, there are a number of different groups and a number of different tensions. U.S. multinationals right now benefit a great deal from the current system, particularly those that have intangible income and are able to shift that income into other jurisdictions. They pay low effective tax rates. They don't care if the statutory rate goes down. So they're not likely to pay for or to lobby to pay for a statutory corporate rate cut by giving up some of these benefits that let them locate their profits overseas. By the same token, domestic companies pay a high statutory rate. Energy companies pay a high statutory rate. Oil and gas companies pay some of the highest taxes in the world. Those groups don't mind giving up tax expenditures in order to pay for a lower corporate rate. They don't care much about the provisions that let multinationals profit shift. So they would be in favor of a rate cut, whereas they might not care so much about some of these popular tax expenditures that Congress is discussing trimming. So yes, I think the obstacle within the business community is that there isn't one business community. There are multiple lobbies, they want different things, they are unlikely to be united, and someone is going to come out of the discussion as a loser.
So what about all these companies that are paying low effective tax rates? I mean, you mentioned a few of them, and especially in the high-tech industry, who are saddled ostensibly with these statutory rates reaching up into the high 30% range, but now their effective tax rates reach down as low as 0 in some cases. So what about these guys? They're doing all this profit shifting. Is there going to be some way to plug that loophole?
This is a loophole that will be plugged, whether Congress acts or not, because this is the profit shifting by Google, the profit shifting by Apple in particular. Apple's been the subject of its own hearing on the Hill. This has attracted the attention of international regulators, the Treasury Department, and Congress. And so this is somewhere where there is room for compromise. And as I said, it doesn't necessarily require a legislative solution. Simple practice changes, simple regulation changes at the IRS could stop some of this profit shifting. And there is a broad consensus here to rein this in, not just in the United States. This has now become an international issue, with the OECD pushing a base erosion and profit shifting report, with other countries saying enough is enough. These companies must pay tax somewhere. To the extent that Treasury officials have at several conferences said the party is over. Multinationals will pay tax somewhere in the future. Does this require tax reform to get through? I don't think it does. I think these could be small legislative fixes by Congress or even regulatory fixes by the United States. So this loophole, as it were, I think it will be closed.
Is that going to increase the pressure for reform, though, if these companies, which are now basically skating through without paying much in the way of taxes, are suddenly going to actually have to pay?
I think that's interesting because a change in the profit shifting rules could push big companies like Apple and Google to suddenly become in favor of tax reform, whereas now they're probably somewhat reluctant participants in the tax reform discussion because they're making out pretty well under the current system, and they pretty much couldn't care less about what's done on the individual side. So why have other countries, particularly OECD countries, been able to lower their corporate tax rates, but we can't?
I think other countries, for the most part, have more options in their tax system. In particular, most of them, almost all of them, have a value-added tax of some kind. And that gives you another source of revenue to raise lots and lots of money and make up any money that you give up in corporate tax reform. The U.S. is much more dependent on its corporate tax than other countries. And we're going to remain dependent on it until we develop another source of revenue that really produces a lot of money. A value-added tax, a carbon tax, some other kind of energy tax, some other source of money.